This program is presented by Drake University on iTunes U.
Good evening. Are we on? Good evening. Come on, it's Drake. Where's Dr. Maxwell? Good evening. Thank you for coming out this evening on a Thursday night for our roundtable on Islamic finance, sponsored by the Principal Financial Group Center for Global Citizenship. I'm going to introduce the panels first, and then we'll turn it over to our moderator and get started. Starting across the panel, closest to me, I'm sorry, Kavi, I'll come back to the moderator, is Datuk Noripah Kamso. Datuk is currently an advisor to CIMB Islamic. She was previously the CEO of CIMB Principal Islamic Asset Management. Since 2008, she has successfully established a platform for the firm to extend its reach across the globe. Previously, she served as CEO of CIMB Principal Asset Management, where she pioneered the listing of the world's first regional Asian exchange-traded fund on the Singapore Exchange in 2007. She is a two-time winner of the Marketing Personality of the Year Award, awarded by the Asia Asset Management for the Asia-Pacific region, CEO of the Year for Malaysia in 2007, and has earned the Personal Achievement Award for contribution to Islamic asset management by the International Tocqueville Summit in London in 2012. Besides serving as a council member for the Federation of Investment Managers Malaysia, she is the past president of the Malaysian Future Brokers Association. Sitting next to Noripah is Jim McCaughan. Jim is president, Global Asset Management, and Chief Executive Officer of Principal Global Investors. Jim oversees all global asset management activities for the Principal Group, including developing global strategies and identifying and analyzing marketing opportunities. He has 33 years of experience in the investment business and 9 years at the Principal. Before 2002, he was the CEO of America's division of Credit Suisse Asset Management, New York. Prior to Credit Suisse, he was president and chief operating officer of Oppenheimer Capital in New York. McCaughan is a fellow of the Institute of Actuaries and a graduate from Cambridge in mathematics. Next to Jim is Daud Vicary Abdullah. Daud is president and chief executive officer of the International Center for Education in Islamic Finance, or INCEIF, which is known as the Global University of Islamic Finance. He has been in the finance and consulting industry for almost 40 years with significant experience in Asia, Europe, Latin America, and the Middle East. Since 2002, he's focused exclusively on Islamic finance. Prior to INCEIF, he was the Global Islamic Finance Leader with Deloitte. Daud holds an Economic and Social History honors degree from the University of Bristol in England. He is a distinguished fellow of the Islamic Banking and Finance Institute of Malaysia and a former board member of the Accounting and Auditing Organization for Islamic Financial Institutions. In 2008, he was awarded the Chartered Islamic Financial Professional designation. He sits on the board of governors of both the International Academy of Financial Management and the Institute of Enterprise Risk Practitioners. And our final panel member on the left to right, for you, is Larry Zimpleman. Larry is chairman, president, and chief executive officer of the Principal Financial Group. Zimpleman joined the company in 1971 as an actuarial intern. From 1976 to 2003, he served in various management and leadership positions. He was named president of Retirement and Investor Services in 2003 and president and chief operating officer in 2006. He was named President and Chief Executive Officer and Chairman in 2009. Additionally, Zimpleman serves as Chair of the Board of Trustees for Drake University. He is also Vice Chair of the Iowa Business Council and serves on the Financial Services Roundtable Board and Executive Committees. He's also on the board of the American Council of Life Insurers. He is a fellow of the Society of Actuaries and an enrolled actuary. He is a member of the American Academy of Actuaries, Des Moines Actuaries Club, Business Higher Education Forum, and the Business Roundtable. And something we are all proud of at Drake, he earned both his bachelor's and MBA from Drake University. Moderating our panel tonight is going to be Kavilash Chawla. Kavi is the Managing Director of Global Strategies, where he is focused on providing clients with strategic advice necessary to drive growth, create stakeholder value, and mitigate risk. As a leading advisor and successful entrepreneur, Kavi previously founded and managed a boutique investment strategy advisory firm and is currently an investment partner in a US-based specialty food company and a UK-based investment management firm. As an expert and global leader in the Islamic finance industry, Kavi also regularly authors thought pieces for the industry and the global press. Kavi previously experience includes serving as senior consultant to associate partner at a leading management consulting firm and is an equity capital market specialist in the investment banking industry. Kavi holds an MBA from the University of Chicago Booth School of Business, a master's in international affairs from the School of International and Public Affairs at Columbia University, and more importantly, he earned a BA from Drake University with a triple major in economics, history, and political science. This spring, he will return to Drake as our global practitioner in residence. Kavi.
Thanks. I hope everyone is excited as I am for today's roundtable. When I was a student here, it would have been very unlikely, so it shows the progress of both global finance but also Drake and the community. I'll ask all the panelists to please use the microphones. I believe they're trying to record this, so that would be very helpful as we go through. The goal is to have a very lively discussion, so I'm sure we can expect that with the panelists. For the audience, you were probably handed a note card when you walked in. If you'd please be kind enough to just write down any questions, and then they'll be collected. Part of the goal of this is to eliminate some redundancies in questions, and then we'll raise those towards the end of the conversation. So I'd like to start by turning it over to Datuk Noripah. And I'm wondering if you can just give us a little bit of context around what is different between Islamic finance versus conventional finance. What are some of the tenets that underpin Islamic finance?
Thank you very much. Thank you very much, Kavi. Can you all hear me? I'm actually very impressed with what we went through the last 2 days with Drake. Very impressed with the whole community in Drake, and both me and David is so honored to be on this panel. But I'll try to simplify the answer that is being asked by Kavi. The tenets for Islamic finance can be simplistically split into 5 Sharia principles or Islamic principles. The first, second, and the third are prohibitioned. The fourth and the fifth are obligationed. The first prohibition is prohibitioned in earning interest. And that would actually extricate out banks if you're investing in banks or taking a loan, which is conventional from a bank. The second prohibition is prohibition of anything that is ambiguous, which means anything speculative is out, or anything that is uncertain, which means gambling is also out. The third prohibition is prohibition in certain business activities that grants harm to human being. And this means brewery or liquor is out, pornography is out, weaponry is out, banks are out because it's usury, and the fourth and the fifth are obligations. In Islamic finance, there must be obligation for all transactions to have underlying assets. Islamic transactions are not allowed to be done without the person who signed a contract not to have an asset. Meaning you're not supposed to sell anything you don't own. You have to own an asset before you can actually do a transaction. So there must be underlying asset in the transaction. And the fifth obligation, the the fifth obligation is to make sure that there is profit and loss sharing. And as such, in the contract, in Islamic finance, you must make sure there is certainty in the profit that is being earned so that there is no debate and controversy when the contract is being negotiated.
Perfect. Thank you, Datuk. So Jim, given some of these rules around what are required for an investment to be Sharia compliant, how on a practical basis as an asset manager do you screen or determine what you can or cannot engage in?
I'd like to give you 2 examples as to how this works, Kavi. Firstly, equity portfolios. And Datuk Noripah outlined the prohibitions under Islamic finance, essentially leverage, interest receipt, some specific activities like gambling and liquor. You can look at the universe of available equity securities and basically cross off the ones which don't fit with the prohibitions. And in fact, from our point of view at Principal, there are really 2 ways in which this gets done. One is through the indexes of Islamic compliant stocks, which are maintained by a number of institutions, but then working with CIMB as our joint venture partner, there is a Sharia board consisting of financially sophisticated scholars in Islam who will make rulings on what is prohibited and what is not. With those 2 outsourced, in a sense, agencies helping us determine the universe, the job of managing an equity portfolio then is to optimize the portfolio from that restricted universe rather than the whole universe of stocks, including the prohibited stocks. And there are a number of ways to do that, but we have developed actually quite a successful and well-structured way of managing Islamically compliant equity portfolios on a global basis. And working with CIMB, we at Principal now manage significant amounts of globally invested but Sharia compliant equities for institutions in Islamic countries, notably in Malaysia, which is the pioneering country here. But we expect to see that grow across the Muslim world looking forward. And as they become more integrated into the global economic system, but nevertheless want to invest with the benefits of equity without compromising their religious principles. So that'd be one example. The other example is sukuks, which are within the structures Datuk Noripah described. A sukuk is what you get in effect for bond financing. Now obviously, since payment of interest is prohibited under Islam, bonds are a bit different from the traditional bonds that you see in the conventional market. Essentially, they depend firstly on the backing of an asset, and secondly, on the payment of a share, albeit a capped share, in the profits of an enterprise. So in other words, they're a bit like preferred securities. They're actually just a different place in the capital structure compared with conventional equity or conventional bond investing. And sukuks, therefore, are a very interesting vehicle for fixed income investors to use. And we have actually built a team to manage sukuks in a very effective way, taking people who did other kinds of structured investing here in the US and having them work with our partners in Malaysia to manage sukuks in a very effective way. So I think that's something that will grow as investors who want to invest in a bond investment but without compromising their religious principles, and indeed issuers who want to tap that market issue sukuk bonds. Very interesting, very broad range of issuers. And those are really the 2 ways that we satisfy the 5 criteria that Datuk Noripah described while managing assets which will optimize the returns available to investors.
Thanks, Jim.
Daud, so Jim talked about how, from an asset management perspective, they screen for acceptable assets. From a corporate perspective in managing an institution, how does a company manage itself differently from a conventional company to make itself Sharia compliant? Balance sheet, different boards, et cetera.
Right. Well, thanks for that question. And again, I'll tackle this rather like Jim has in two parts. There are two fundamental differences. The first difference in terms of the organizational structure, as Jim correctly opined, is there is a need within an Islamic financial institution to have access to the governance of a Sharia board. They are extremely important in opining as to whether a product is valid or whether the income recognition is valid and so on. There are different structures to Sharia boards as you go around the world. In Malaysia, where I am based, each individual institution must have a Sharia board, and there is a governing Sharia board at a national level which sets strategy and policy and overall decisions. In the Gulf, typically there are individual Sharia boards which are applied to each individual financial institution. Interestingly enough, during announcements made at the World Islamic Economic Forum last week in London, which I was privileged to attend, the governor of the Central Bank of the United Arab Emirates declared on stage that they too would be following the Malaysian model and introducing a second level. Oman is following in that way, and that is actually very reassuring because from an organizational standpoint, you do not have the opportunity for, shall we say, banks or financial institutions to go what is called Sharia shopping and stacking the board with Sharia scholars who will approve certain instruments in one place and perhaps not approve them at another. So the organizational aspect of the Sharia board is very important. On the balance sheet aspects, I think there are probably two things that I'd highlight, although there are there are a number of differences. The first is conceptual, and I'm a banker, not an asset manager. I'm a former banker. One of the things I always struggled with at the first Islamic bank that I ran was I had a Chinese multi-billionaire owner who understood the conventional finance. He's a former investment banker, but he understood in the balance sheet that the difference between asset and liabilities, that very largely in running a conventional bank, you have assets which are effectively at a floating rate. In other words, you have variable rates of interest that you charge on your mortgage, and on the liability side, you have fixed rate deposits. In other words, you know what you've got to pay. In an Islamic bank, the roles are somewhat reversed because apart from the fact we don't charge interest, we work on profit and loss basis. On the asset side, in an Islamic financial institution, that is actually fixed. So you have a fixed rate, so you know what's going to be paid, and the variable is on the deposit side, the liability side, where in effect you don't have an interest rate, but you have a profit sharing rate, and that is variable depending on the performance of the bank. So that's actually a fundamental difference in terms of the dynamics of the balance sheet. The other thing that I would add is that under the close control of the Sharia board, there is something which is called cleansing. And as Noripah correctly pointed out, there are certain things which you cannot have in an Islamic financial institution. And if, for example, that you as a financial institution or indeed as an asset manager had an interest in an Islamic real estate investment trust, a REIT, and the dynamics of that trust changed in midterm. In other words, you got a building, you got lots of tenants, they were all Sharia compliant, and then one of the tenants pulled out, and it was replaced by a conventional bank branch. The income from that bank branch would no longer be applicable in a Sharia compliant manner. Therefore, the income would need to be cleansed, and usually the Sharia board would ask for that income to be cleansed by it being donated to an acceptable charity. That's a fairly limited and concise explanation. There are several other differences, but I think for this audience, that's certainly a start to get a feel for the main differences. Perfect.
Thanks, Daud. So, Larry, why, from principal's perspective, did they get involved in Islamic finance, and why, in Des Moines and Iowa, should we be interested in, why is Drake allocating resources to educate both the local population but its students about Islamic finance?
Well, thank you. I appreciate the chance to talk about that a little bit. And first, I guess let me say that obviously what we're trying to do is to be involved in what we would perceive to be sort of long-term, high-growth businesses. And maybe one example, sort of outside the Sharia-compliant world, would be just generically emerging market securities, whether it's fixed income or bonds. Jim's team has substantial capabilities, and we've added capabilities in emerging market securities. Why are we doing that? Well, we're doing that because if you look broadly today, the emerging markets are probably 40 or 45% of the world's capitalization, but the average investor, certainly in the developed world, I would say the average investor has maybe 5% or 10% or maybe at most 15% of their portfolio in emerging market securities, whether that's fixed income or equities. So I don't think you have to be a rocket scientist. Even an actuary from Drake can figure out there's probably going to be, in the long term, there's probably going to be a significant shift of money from developed market fixed income and equity to emerging market fixed income and equity. And we would rather be there to develop our capability first, and we want to be where the big rivers of money are going to flow. So when you think about the context of Islamic, the first thing I would say, which was sort of a learning experience for me, and heavens knows I on this panel know the least of anyone here, but you need to sort of get away from the notion that Islamic asset management would only apply to Muslims, or that they wouldn't be applicable to other parts of the world's population. I think they clearly will be in time, so I don't want to give that impression to the audience. But having said that, one stat that always sort of impresses on me what the potential is that Muslims have 25% of the world's population, and today, if you look at Sharia-compliant assets, they're less than 1% of the world's portfolios. So no matter how you look at it, clearly there is going to be large amounts of money, either from Muslim populations or other populations, that are going to flow from more conventional types of securities into Islamic. So if you are thinking about the attractiveness of high-growth, long-term businesses, I mean, this is just a no-brainer.
If I might add to that, just from experience, from a banking experience in Malaysia, it may surprise you to know Malaysia, if you're familiar with it or you're not familiar, it is a multicultural society. It's about 65% Muslim, Malays, and then percentages of Chinese and Indian. The first Islamic bank I set up and run was actually owned by a Chinese billionaire, but he wanted an Islamic bank pretty much for the purposes you've just described. And what was very interesting at that time in 2005, 80% of my customer base were non-Muslim. And the reason they were with me is because it was a better value proposition. It still is the case, I think, in the retail front in Malaysia, that the vast majority of the non-Muslims prefer to bank Islamically because it's a better investment return and it's a better financing deal for them overall.
Maybe I could add here, if I may, Kavi. The two examples I gave a few moments ago, Islamically compliant or Sharia compliant equities, unlikely to be many buyers who are not Muslims. There may be some, and there is an argument that the prohibition on interest and high leverage and the general ethical standards may in some markets improve returns. But the really interesting piece for non-Muslims is that sukuks give a different risk exposure and a different exposure to credit compared with all the other stages like secured debt, subordinated debt, preferred securities. And the conditionality of the fixed income payment is something that can be analyzed with an interesting risk reward. And to that point, there have been recently, over the last year or two, significant purchases in the sukuk market by, for example, Japanese insurance companies. And they're doing so because they like to be in that particular part of the capital structure.
Thank you. Since the discussion is on capital market and sukuk, I thought I'll just add what my former boss, Jim, has been very inspirational in talking about sukuk. In fact, Jim, if I may add, National Bank of Abu Dhabi just issued a sukuk, and that sukuk is able to be used as the tier 1 capital to meet their Basel III.
Yep. That would be right.
Right? So if you talk about sukuk, effectively there is a large potential in its utilization going forward, because just by thinking of using the National Bank of Abu Dhabi example, we could probably think laterally towards what's happening in the bank in the Eurozone. They actually need capital restructuring, and they also need money to restructure their capital. And I think just by using sukuk, they would be able to get a broader investor base. And that broader investor base would not just capture people in Asia, which is South Asia. It could also capture the petrodollars, because sukuk effectively is an attractive investment instruments in the Middle East. So if sukuk can be used to actually recapitalize the banks in the Eurozone, that would actually make sukuk to have a very exponential growth.
That's a very interesting point, because the most controversial area when banks get into trouble, or indeed for banking regulators, is the resolution of troubled banks. And if you look at what's happened with troubled banks, whether in this country in 2008-9 or more recently in the Eurozone, the whole issue has been to what extent do bondholders, fixed income holders get bailed in. And that actually, I think, is a very interesting application of the sukuk principle. There's been lots of talk of CoCo preferreds and all kinds of instruments that might count as tier 1 capital in the way Noripah described. But a sukuk is a very interesting idea, because it creates the ability for the bondholder, or in this case the sukuk holder, to take a risk, be rewarded, but when things go wrong, the losses are a different characteristic to those of a bondholder or a preferred. So I would echo what Datuk Noripah said about banking capital structures. There's no really good answer in the world to how you buy in and how you create how you dish out the losses between the different parts of a troubled bank. But this is one answer that may actually be quite promising looking forward.
It looks like we're on a roll on this question. And this issue of sukuk, and I completely agree with the other panelists, and the audience may be aware that last week there was a very significant announcement in the United Kingdom, where Prime Minister David Cameron announced that the UK would be the first non-Muslim country to issue a sovereign sukuk. And part of the thinking behind that was exactly the situation that both Noripah and Jim have alluded to. The other part of the thinking was the fact that as London, as the world's leading financial market, wants to maintain its #1 status. And as Prime Minister Cameron said, they cannot envisage maintaining #1 status unless they are fully engaged in Islamic finance.
So to piggyback off this discussion then, and perhaps I'll turn it to you first, Datuk Kamso, can you talk about or highlight the role that the development of Islamic finance in Malaysia, given it's a leader in the industry, was an early mover in the industry, had on its economic development as a global financial center?
Thank you, Kavi. To answer this question, I actually need to go back to history. And the history will have to be longer than the history of principal's existence in Malaysia. Principal's existence in Malaysia was in year 2002, right? And Islamic finance has been the inspiration of a task force under the previous Prime Minister, Tun Mahathir Mohamad. 35 years ago, Malaysia was not a nation as modern as you see today. 35 years ago, we were actually manufacturers, world manufacturers of air-conditioned. And when it was taken away by China for low cost and Vietnam of low cost, we actually sat down and brainstormed and said, let's be on the world map. There's only, at that time, 18 million of us. How can we be on the world map? And we said, let's be a developed nation by 2020. And let's pour our money into roads, infrastructure, schools, Formula One, Petronas Twin Towers, airport. And together with that, the task force said, but we are still not on the world map. And we said, why don't we become a financial center? Now, Malaysia is such a small country, and we said, for us to be a globalized Malaysia, we need to be a hub. And for us to be a hub, it has to be a financial center. But we said, we are not able to compete with London and New York at that time. Those are actually global financial centers who are very large. And we look back at the population, like David said, there's 65% of Muslim in Malaysia. And we said, hey, we can be an Islamic global hub. And then as we combined the total economic transformation program as a developed nation for 2020, we said we'll be a developed nation, but an Islamic, modern developed nation with an Islamic finance center, which is actually a hub for the global financial community. And as an outcome of that, we started to internationalize Islamic finance in the global space. As we internationalize, we actually need to build a benchmark. Our benchmark is not just Malaysia. Our benchmark has got to be London and New York. So we started building the like of Basel III, which in Islamic finance is IFSB.
Islamic Financial Services Board.
Islamic Financial Services Board. If you actually look at the governance and the regulatory and legal framework of a financial center, whether it's London or New York, we started building it. We started building it for the use of all the Islamic finance players globally. So what is the role going forward? The way we look at it, we have to make sure we look at all the legal and regulatory framework to make it as comprehensive as possible. Our role is to bring in as many players as possible, and that is why we have been very supportive of Principal coming over to Malaysia. They actually own 50% of the joint venture company called CIMB, Principal Islamic Asset Management, where I was actually the founding CEO of that company. And Malaysia decided, let's not charge tax on revenue of this Islamic asset management company. Let's bring in all the international name. And now we have 18 global asset management house residing in Malaysia, but offering global services. And actually the latest is thread and needle. Threadneedle, yeah. The latest is Threadneedle. So we have Goldman Sachs and Nomura and Amundi and Threadneedle and Templeton. They are all in Malaysia offering Islamic global asset management outfit. And we have started to look into improving our Islamic Finance Services Act with a special focus on making sure there is real governance and global best practices that comes along with the offering of such a platform. So the role actually has an end. We just started.
I want to echo what Datuk Noripah said, and she talked about some of the formidable competitors who are also in the Islamic asset management business in Malaysia. I have to compliment Datuk Noripah. She is too modest to say this, but she started for our joint venture the leading Islamic asset manager.
So to take it from where Jim left it off, in looking at principles growth, Larry, where do you see opportunity for Islamic finance growth for Principal outside of Malaysia?
She's also too modest to say that the Islamic Asset Management Company has been recognized 2 years in a row as the best Islamic asset management company in the world. So it goes even further. So congratulations. I'm probably not smart enough, Kavi, to know, exactly where, Islamic finance or Islamic asset management goes. I do, just my own kind of ruminating around it, because again, I don't consider myself an expert like others here, but I think both Jim and Datuk Noripah, spoke well as to the opportunity in global sukuk. I mean, I think that's just going to become a mainstream asset class. I mean, it's different than traditional fixed income. It has characteristics that are appealing to many, many investors. Again, forget Muslim or non-Muslim. It just has very attractive characteristics. And I think if anything, the financial crisis has actually served to sort of propel or sort of jet propel, I think, the structure that, that sukuk has. I think that is both for regulators and frankly for many investors, is just a superior structure in many ways because of its kind of profit-sharing sort of nature to it. So that, I think, is very easy to see. Even if you think about, here in the United States or in the developed world, one of the biggest challenges that we have is infrastructure. We are decades behind here on infrastructure, and if you go to, other places, I go to Latin America a fair bit, I go to Asia, they are even further behind in their infrastructure investing, and it, again, seems to me that sukuk is an ideal form. Infrastructure investments, sort of almost by definition, are going to extend over long periods of time, 15, 20, 25, 30 years. And, a traditional, conventional, fixed interest structure, I think, is very challenging over a period of time like that, where, you're probably going to see, a couple of recessions during that time. You're going to see interest rates cycle by, who knows, 800, 1,000, 1,200 basis points. So just the basic sort of construct of sukuk, to me, seems so much more suited for infrastructure kind of investing. I think, just to maybe offer a slightly different view to what Jim said, and I always need to be careful about having a different view than my asset management head, who knows about 40 times more than I do on this. I have seen Datuk Noripah present some very interesting evidence, albeit it's over shorter periods of time, but some very interesting evidence on the equity side that during the financial crisis, the performance of Islamic portfolios in the equity space was, while down, not down nearly to the same degree that traditional portfolios were, and that they've sort of bounced back with about the same level of movement back up. So if you were to sort of parallel them at this point and benchmark them, you would see that generally, again, the performance of the sukuk equity or the Islamic equity portfolios, still looks pretty good at this point. Now, whether, we're going to enter a more overheated period where that reverses itself, I think, is yet to be seen. But clearly big opportunities around sukuk, and I think then the jury's still out a little bit more on the equity side.
Thanks. So, Jim, in running a global asset management business in Islamic finance, what are some of the challenges then that you've faced in building that portfolio?
I think that the main challenge has been to find the right people to take the process forward. And we were very fortunate in our joint venture partner at CIMB and particularly working so closely with Datuk Noripah, that we were able to find local talent which knew the circumstances in which the investors, based in particular in Malaysia, were working. So local talent was a major part of it. But I think it's also critical, as the market developed, that we have transferred several people from here with relevant experience. And I talked about the development of the sukuk market. We covered that somewhat earlier. Noripah did also. We found that the first person we sent several years ago, actually, about 4 years ago, to Kuala Lumpur to really develop the management of global sukuks, had a background in US mortgage-backed securities. Now that may sound odd, but remember, one of the features of sukuks are that they're asset-backed, and so are mortgage-backed securities. So he was able to transfer skills developed in the US capital markets very rapidly to become effective within the Islamic market. And I think that's an example of the sort of thing we've been doing to complement the local skills and expertise that primarily came from our joint venture partner at CIMB, with more of the global skills that will enable us to be a very effective manager of these types of asset mandates. But really, as with any investment management operation, finding people with the right skills is number 1, 2, and 3 in terms of developing the business. Then maybe the next thing is finding the clients. Up to now, it's really been primarily Malaysian clients. But working with Datuk Noripah and her colleagues, we actually have developed a UCITS fund series, which we have high hopes for over the long term, for example, into the Gulf. And I think that's aiming at the high net worth, the family office structures. That's probably where we will go next. But we are very optimistic that Malaysia will be a base for providing services through the Islamic world.
So, Daud, to Jim's point that talent is the key challenge, can you speak about how, from INCEIF's perspective, you see the global talent market for Islamic finance, and again, how you're trying to address it, both on the Islamic banking, but then also on the Sharia scholar end, as again, they play a critical role in the entire infrastructure of the industry?
Well, thanks, Kavi. That is a great question, and I'm afraid I'm going to have to go back into history slightly, and I'll try to be brief. 2005, I was managing director of the first Islamic bank that I set up. And one of the challenges I had, and this was in Malaysia, was that's only, I have to do my math now, it's late in the evening and kick in the jet, 8 years ago. 8 years ago, in that position, I went to see my current boss, the governor of the Central Bank of Malaysia, together with several other CEOs in the marketplace, and said, these initiatives to grow Islamic finance in Malaysia that Noripah was talking about earlier are absolutely wonderful, but where are the people? In my estimation, at that time, just 8 short years ago, there were less than 50 capable people at senior level running financial institutions. And out of that, INCEIF was born with a mandate to educate and to train at a professional and an academic level students or professionals up to a level who were capable of taking on and running. And we took our first student intake at INCEIF, I wasn't there at this time, in 2007, 33 students on one program from 7 countries. Today, and I've been now with INCEIF 2 years, we have 2,200 students from 85 countries running 3 programs. We've graduated 619 graduates from a variety of countries, all at master's level, with a professional qualification called a Chartered Islamic Finance Professional, a qualification I have, master's and PhD. We also have a sister organization under the INCEIF umbrella called the International Sharia Research Academy, ISRA, another initiative coming from Malaysia Incorporated, which indeed INCEIF was, where we are looking at building up Sharia scholar capabilities through research. And in recent announcements, which some people in the audience may be familiar with, the Sharia scholars body is now forming a kind of international standard-setting body, not for Sharia pronouncements, but for how they make those pronouncements and communicate them. The challenges in the industry, and you can see this, now I'm not running a bank, I look at my global heat map in terms of education, and I can tell you where the next things are going to happen. And maybe I should charge a fee for this, Jim, because it's a lot easier doing education than spotting the deals. The hottest spots are, in terms of growth of Islamic finance, are in fact Turkey, which is growing phenomenally. There's a great deal in happening in Africa, both East and West. We will be announcing collaborations in East Africa by the end of this year and in West Africa, in French-speaking Africa, by the end of the year. Along North Africa, which I have to plug this, which Noripah calls the metal countries, that's Morocco, Egypt, Tunisia, Algeria, and Libya. That is starting to move. Central Asia, all the stans. Tajikistan, Uzbekistan, Kazakhstan, I can't think of too many, Turkmenistan, there are plenty of stans there. And actually in Europe, with these announcements from the UK, and as a result of last week's announcement by the Prime Minister of the United Kingdom, INCEIF is now in a position where we have signed today, and this is a historic day for us, because as Professor Tom Drake will tell you, I signed an agreement to collaborate with the UK university on Drake premises today. The MOU was signed for INCEIF to deliver Islamic finance executive programs to the City of London at professional level, and this will be announced. You're the first to know. This will be officially announced next week by Prime Minister Cameron and Prime Minister Najib at the Commonwealth Heads of Government Conference in Sri Lanka. So that is the heat map, that is what is happening, but overall what is required in education in Islamic finance is building the skills, the quality to a professional standard. And just like the accounting profession, which has CPA professional standards, ACCA professional standards, the Islamic finance industry also needs to build those professional standards. We believe it's the Chartered Islamic Finance Professional, which is independently accredited by the Association of Chartered Islamic Finance Professionals, to ensure that every university, every training course that is delivered in the world can be accredited against a common professional standard, so that everybody knows that anyone who has that qualification is transportable between jurisdictions.
So does that apply just to, again, bankers or practitioners, or does it also apply to Sharia scholars? And part of the reason, for those who are familiar with Islamic finance, I'm asking this is, you've talked about opportunity in Sukuk back, I think it was 2007, 2008. One of the prominent global scholars essentially said that 85% of the Sukuk in the market do not meet Sharia standards, even though he signed off on them. Goldman Sachs in 2012 was looking to issue a $2 billion Sukuk. There were a lot of questions about its Sharia compliance. So, from a Sharia scholar perspective, how do you deal with that ambiguity?
Right. I mean, let me take that first off, and you're referring now to the pronouncements of Sharia scholar under the auspices of an organization where I was a board member, but not at that time, fortunately. Of AOFI, this is Sheikh Taqi Usmani from Pakistan, made these pronouncements. I think after the fact, he did state that he'd made some of the statements erroneously and had misled, but he clearly impacted the market, because markets don't like uncertainty, and you look at the levels of Sukuk issuance, 2008, 2009, they didn't fully recover until 2010. I'm not going to comment on whether he was right or wrong or what he did. It was a debate about whether the Sukuk was actually asset-backed or asset-based, and if you go into the fine detail of this, basically a Latin phrase comes into mind. It's caveat emptor, buyer beware. You need to look at the fine print and understand it. But I think the real issue you're raising here is one of not of standardization of Sharia decisions, because there are 4 major Sharia schools of thought, 95% of the time they're pretty much in agreement. 5% of the time they have some differences of opinion, which is healthy for the growth of the industry. What is important is that the process of Sharia governance is transparent. How did these guys make the decision? Is there a standard process which is documented? Is it publicly declared? And that is what ISRA and the Sharia scholars announced at WIEF last week, that they would be applying those process standards, not the schools of thought standards, but the process standards which would be self-imposed, because if they weren't self-imposed, I'm sure jurisdictions would start imposing them. And I think it's a smart move to get over this problem with people not going out of line, but actually describing how they reached a decision, allowing it to be documented, and going into a Sharia or fatwa database that anybody can refer and basically say, I understand how that decision was reached, and we can apply that in other circumstances. So again, it is about professional standards within the industry.
And Jim, Larry, Datuk, Kamso, would any of you like to comment on how, at an organizational level, you've mitigated against some of these potential Sharia risks or concerns?
Yeah. It's interesting taking Daud's commentary about the slowdown in Sukuk issuance around 2009. That was, I'm sure, partly, as has been discussed, controversy over what was or was not Sharia compliant. I do think, however, that the other reason for that slowdown was the financial crisis and the impact on particularly asset, commercial real estate values. And you'll recall that in the financial crisis there was some stress on particularly the Gulf region and particularly Dubai on real estate companies, some of whom had issued sukuks. I think some of the slowdown was just general lack of liquidity in the market, and some of it was, in particular on the sukuks, a little bit of uncertainty about how resolution would happen of troubled companies. So there were a number of things going on here. It wasn't just the legitimate disputes among the Islamic scholars. And I think, as Daud has said, I actually feel pretty confident, since 95% of the time there's pretty good agreement.
This isn't a comeback, because I agree, and I think you've added another dimension there. At some time, the Islamic finance phenomenon needed to be tested, and it was tested partly because of Taqi Osmani's pronouncement, but also the global financial crisis. You truly don't stress test the system until some things start to fail, and in some ways it was a blessing in disguise that this occurred, and the dispute resolution and the regulations that surround it have actually strengthened the industry in terms of the financial stability framework, some of the regulations that have since come into play, and a general understanding that it is so important in building the infrastructure to support Islamic finance that you have an appropriate regulatory infrastructure in place. And this is very much the case of where Malaysia has succeeded very robustly in building a Sharia and legal framework, a tax framework, an auditing and accounting framework, a regulatory framework, and also a standards framework, which is second to none in the world. And that is absolutely mission critical to achieving success in Islamic finance. As I'm sure the financiers, I'm an ex-financier now, these guys, well, Noripah, you're sort of sitting on the fence as to whether you're a former finance, but I'm sure they will all agree. As an ex-financier, I would say markets do not like uncertainty. And if you've got the regulatory framework and you've got the standards in place, then certainty cannot be guaranteed, but the market likes it. It knows what will happen when there is a default. You have the right of recourse. It's clearly upheld by the rule of law, etc., etc.
Kavi, if I can just add what you all call him Daud, I call him David, but it's the same.
Call me either. Neither's a rude word.
Everything he says is absolutely right, but I just need to add that on the topic of Sharia scholars, there is always two debates. The first debate is inconsistency or non-standardization that was just hinted by Kavi. And The second is for us to understand the difference between Sharia and Islamic religion. I'll answer the second one first. I've mentioned to Professor Tom Root, for example, we might want to use the word Sharia in DeKalb. Sorry, DeKalb is where I studied, Northern Illinois University. You might want to use the word Sharia over in Des Moines because of image risk, instead of using the word Islamic. Because the word Islamic is always related to Sharia scholars who are preaching faith and religion. But when you talk about Islamic finance or Sharia compliant finance, we are actually dealing with contracts, Islamic contracts. We are not talking about faith, we are not talking about religion. So just based on that mindset, back to the scholars are actually not religious scholars. The scholars we have here are scholars who has a commercial mindset. But the challenge is some of the scholars come from different parts of the world. There are 4 types of schools in Islam. There's the Hanbali, the Shafi'i, the Maliki, and the Hanafi. They all come at different time of the period in different jurisdictions by different scholars. But we should not be confused by the 4 schools, because all the scholars has actually lately converged into a common understanding. And how it is done is because, say, CIMB Principal Islamic Asset Management, the scholars we have are not just scholars from Malaysia. We have scholars from Canada, we have scholars from Saudi Arabia, we have scholars, of course, from Malaysia, and we have scholars from Bahrain. And as such, all these scholars come from different jurisdictions and different school of thoughts, will converge, discuss, analyze, and come to a conclusion. So there has been a study, actually, that has been initiated by ISRA, which stands for
International Sharia Research
International Sharia Research Academy, which is based in Malaysia for the purpose of global research. ISRA has proven that more than 95% of the decisions made by scholars are actually consistent, standardized, executable according to Sharia principle, except for that 5%. And even that 5%, which is not incongruent, is going through the process of it, being looked at, being analyzed at, and we are quite positive that it will, at the end of the day, a lot more comprehensive. But here I am, a marketing person. That 5% is actually an opportunity for me. Kuwait, for example, is totally different in the way they interpret. To me, I can actually custom-made a comprehensive product just for the Kuwait market. And I can just sell it to Kuwait. So to me, it's still an opportunity. I saw the glass half full instead of half empty.
Perfect. Thank you. So one last question for the entire panel, and then we'll take some questions from the audience. Given the focus on opportunity, the wealth, capital in the Muslim world, flowing to emerging markets, I'd like each of the panelists then to their final comments to be around what are the opportunities here in the US for Islamic finance? What are some of the challenges, and where do you see the industry from a US perspective in the next 5 to 10 years?
Shall I start?
Whomever would like to start.
Thank you. It's easier to start first. Ladies first. That's the American way. You know, if you are in Saudi, ladies last. They cannot even drive. And I just need you all to be sure that is not Islam, that's culture. Yeah. Okay? So distinguish between culture, faith, Islam, and... what was the question again? Opportunities. Opportunities. I think we need to look at the various stakeholders in looking at opportunities. There are various stakeholders, whether you're a bank, whether you're asset managers, whether you're financial centers, whether you're investors, and whether you're a government who wants to take advantage of that. And the question is opportunities for United States. So I want to come back to opportunities for United States from standpoint of financial centers. London, as David mentioned, is using Islamic finance as a niche to compete with New York. If New York is not going to take advantage of this growth in Islamic finance, New York will become irrelevant. New York will not become powerful anymore. And New York will exist, but I was about to say will not exist, sorry. Will exist, but I think will be left behind. So I think one important takeaway for United States is what happened last week in London when Prime Minister Cameron made a political commitment to make sure that London beats New York as a financial center. I just want to share a very strong takeaway here. When we want to take advantage of the opportunities from a national agenda perspective, each of the country must have 3 key success variables. The most important key success variable is the political willpower. Second is the infrastructure, which we have been debating and talking. Thirdly is the talent. And Malaysia had that. We could see London have that. David and myself came back from a conference in Washington on Monday. There was a senator from New York. There was representative from the White House. The senator from New York was actually positive. The representative from the White House was talking about, security, terrorism, and so we were quite mixed because there were a lot of enthusiasm and positive market players in the whole space as well. So if there's no political willpower, but there is actually talent from the bottom, I think America will still struggle. But if there is no political willpower, there is actually talent, but no infrastructure, America would still struggle. You effectively need all the 3 before US can actually succeed in capturing the Islamic finance opportunities.
I would probably come in with a slightly different set of arguments, which is, if you look at the world's capital markets, they need to develop because of the weakness and the tight regulatory position of the banks. It's one of those very interesting phenomena that the US has developed capital markets, but most of the rest of the world has not, and has relied much more on conventional bank finance. And that is an opportunity. I'll take the glass half full kind of a view here too. It's an opportunity that intermediaries, issuers, investors will have, is to develop capital markets in order to create capital, to create credit and economies, which the banking system will not be able to do because of capital constraints. What are 2 of the examples of this? I think the 2 leading examples of developing capital markets that may make a very sea change to how fixed income portfolios are managed would be Chinese bonds, where the renminbi bond market is poised to grow very rapidly from here, and sukuks, which can be multi-currency but have the characteristics we described earlier. And I think that in managing optimal fixed income portfolios, having both of those instruments available is going to be absolutely critical going forward in order to create competitive returns. So I would suggest that it behoves one in a competitive market to take advantage of these different opportunities. And I can't resist commenting, early on in the discussion, Datuk Noripah talked about the great ambitions that Malaysians had 25, 30 years ago to develop the country, become a developed country by 2020. They've done it. Malaysia, through many of the development initiatives that have been made, which includes the Islamic Financial Center, has developed into a real role model for the Muslim world. It's often said that Islamic countries have a development problem. Well, I would point to Malaysia and say that's not intrinsic to Islam. A country can be Islamic and develop very fast. And I think that actually is a great hope for the world rather than a problem.
Thanks for that, Jim. And I can also plug Malaysia as a proud permanent resident of the country. Last week, the World Bank and the IMF announced that the Malaysian economy was the 6th most competitive in the world. And that's a remarkable achievement. Sorry? Ease of doing business. And that is a remarkable achievement, considering just 6 years ago it was somewhere down in the 30s. I'd like to add on to this, and the developing flow of the argument here is very interesting. I'm now in education, so of course I'm going to say actually education and building the talent is going to be very important and is absolutely vital. And I do agree there needs to be a political will. But let me give an example of how political will can be changed, and it links with something Jim has said about China. 4 years ago, I was asked in my role at Deloitte to help set up the first Islamic financial institution in China. It was a provincial bank in the city of Yinchuan in Ningxia province, and Ningxia is up in Outer Mongolia. And the Chinese government were very prescriptive, as they tend to be, saying you can have 3 products, you can't have a money market, we're not going to have any regulations, good luck. But we did it within those constraints. I must admit I had to calm myself down and not go and complain to the governor or to whoever, but we did it within those 3 products and these constraints. As the business grew and we developed a local money market and people invested, and within 1 year the province and the mayor of the city and the governor of the province saw that this was very, very good for business. They also saw that they were attracting a lot of interest from the Gulf, where there was a great deal of liquidity. 2 years after we implemented that Islamic bank, China executed 2 major trade agreements or project financing agreements, which were financed Islamically with Gulf countries. The first was a multi-billion-dollar deal to build the Trans-GCC Railroad, which is effectively financed Islamically and being built by Chinese engineers. The second is a multi-billion-dollar deal from Qatar to build in Chinese shipyards, financed Islamically, 100,000-ton liquid petroleum gas tankers. What happened in terms of changing the political will of the government of China was they couldn't afford not to pay attention to this. And that, I think, is what needs to happen in the United States. I'll put it very bluntly, because I think you're fairly direct people here, and we British tend to be quite quiet and circumspect. You are missing out on major business opportunities because you are not doing as much as could be done to capture this amazing growth in Islamic finance around the world. And one of the things I've discovered in my 2 days at Drake is there's a great deal of debate and knowledge and understanding amongst the undergraduates here and the students we've had the chance to engage with. And my compliments not only to the president, but also to the provost and to the faculty here for being open enough to welcome us here to discuss and debate this. 2 years ago, I was invited to the United States to speak at another university, and when I'd already arrived in the country, I was told that I could not come and speak because it was considered too politically sensitive for someone like me to come and talk about Islamic finance, which I found quite incredible, but I accepted it because that was their decision. So my compliments to Drake for being, I think, brave isn't the right word, but I think thinking forward enough to look at this as a globalization issue and to look at it as something where there is no threat here. It's not about the takeover of the world, it's about doing business in an alternative fashion, and everybody profits from it, and it's for the benefit of all humanity. Thank you.
So I think a sort of shorthanded way of saying what David just said so eloquently is that the biggest challenge in the United States, Kavi, is ourselves. And it's our lack of understanding of what is really going on in the rest of the world. And unfortunately, because most of us spend our time listening to U.S. TV channels and reading U.S. newspapers, we really don't understand. What we find is we understand a little bit about what's happening in the world, a lot only through U.S. eyes, and we understand a lot about what's happening in the U.S., most of which we don't care about. So the last time that I was in this theater, it was filled almost as full as it is tonight with what were then very young-looking, green-eyed, eager freshmen, because I was speaking to a freshman seminar, and I said to them, you know, what I think is kind of the answer here, which is that it's very, very important, if you really want to understand what's going on in the world, to make sure that you're getting information from sources all over the place. So do you go to the BBC website? Do you read the Financial Times? Now you can listen to Al Jazeera America. I mean, there are a lot of things that we all need to change if we want to really become more global citizens, and that's why I again applaud Drake, as David did, and others, because I think they are very much, you know, on board with that. The two final comments. One is that, of course, when in the question a minute ago, David was doing his heat map, you know, he covered lots of parts of the world, but what was one obvious part of the world he didn't cover? There wasn't any heat going on. You know, wasn't any heat going on, which is here. And, you know, the United States has historically been, and I suppose my two friends here from the UK would maybe disagree a little bit, but the U.S. has historically been seen as sort of the, you know, the epicenter of, you know, most things related to higher education, with all due respect to my friend from Cambridge and other UK colleges. But I think that is an issue. It's just a big issue, and it isn't even a question of, you know, needing to do it to build, you know, Sharia scholars or whatever. It's to gain an understanding of different capital structures and finance structures, and, you know, when one is appropriate and another might be. And then the last thing that I'd say is, you know, there's a real urgency to this. I mean, I suspect people in here probably knew when Noripah was going through the background that, you know, this is a 35-year-old industry now moving at light speed. And in most cases, I suspect, you know, 95% of the U.S. population has zero awareness. And if you said to people, did you know it's 35 years old, they would just have no clue at all. So we're 35 years behind and falling further behind every day. And I just hope it's things like this and events like this that we're going to be able to hopefully catch up someday.
Perfect, thank you. Very, very enlightening for me. So I'd like to turn to then some of the questions from the audience. And one of the questions raised, or a couple have been raised, is that, again, the discussion today has been very positive about Islamic finance. What are some of the drawbacks to Islamic finance, perhaps from a macro or a political? You know, we saw some feedback from the Bishop of Rochester after Cameron's announcement about some risks related to the UK focusing on Islamic finance. Brunei recently announced the imposition of Sharia law for Muslims in Brunei. Some people have argued that that's connected to the rise of Islamic finance. So are there any setbacks or risks from the growth of the industry?
Well, it's a great question, and I think there's a complex series of answers to it. But I try to answer it simply. Of course, there are risks, and of course, there are drawbacks. You know, Islamic banks have failed, not as often as conventional banks have failed. I think that probably the biggest risk is something that Jim alluded to, is just lack of understanding of being able to actually comprehend what Islam is about and what Islamic finance is about. And this is not the time or the platform to go into an explanation of this. But what is important is to create the awareness and get the messages out there. When I was asked a similar question 5 years ago, what the most important risks or the most important challenges we had, I came up with a three-letter acronym, EPL: education, perception, liquidity. Every market needs liquidity, but most importantly, perceptions need to be changed through education. I think that, you know, the decisions in Brunei to introduce, it has Sharia law, but this is what is called hudud law, which is sort of strict adherence to Islamic law, which is applied in Saudi Arabia. I think that's a bit of a red herring. You know, Brunei is not hugely influential. I think in those markets which are developing Islamic finance, with all due respect to the Sultan of Brunei, in case he gets to watch the videotape, Your Majesty, I'm extremely sorry. I think it's the application of what I would call common sense approach to the application of Sharia. I've been fortunate enough to be teaching some classes here today, and one of the examples I've used in some of the classes is that as a Muslim, which I am permitted to eat pork under certain circumstances. And Sharia is flexible enough to recognize that the most important thing in Islam is the preservation of life, of deen. And if the preservation of my life or others depends on our having to eat the little porky pig, which is the only other marooned animal on this desert island with nothing happening, then I'm permitted to eat it. So there's a great deal of flexibility in Sharia, which is both transparent and flexible enough to adapt to the circumstances and the situation. So this is not something which I think people should be unduly concerned about, but they do need to raise their level of understanding. And if I can cite one other example, which may interest certainly the lawyers amongst you here. In the US, you have trust law, and that trust law is largely based on English common law. How many people here know that English common law of trust is actually based on Islamic waqf law? The first trust formed in the United Kingdom, and it wasn't the UK then, it was England, was 1234, and it founded an educational institution at the University of Oxford. Merton College, Oxford, founded 1234 on the basis of the concept of waqf, which is an Islamic endowment fund, which was brought back from Jerusalem by the Crusaders because they liked the model so much. So you already have Sharia law in the United States through that historic connection of English trust law, common law, and US trust law.
Talk about risks. If I could, sorry, Noripah.
Go ahead.
You want to? I was going to do on risks. I think we may have a slight debate here.
I will let my former boss go first.
I think you may have a point of view on what I'm about to say, Noripah, which is I do think Islamic finance is a very strong force for good and not very risky so long as it doesn't become exclusive. And I think that's the risk. The risk is some zealots somewhere will say the only way you can run finance is Islamic finance. And I think that would be really dangerous. Markets thrive when people have choices. The great success of Malaysia in becoming a beacon of prosperity for the Islamic world has happened because Malaysia tolerates and indeed encourages diversity. Conventional finance happens alongside Islamic finance. That's strength. If it becomes exclusive, that's risk.
Well said.
That's why I work well with Jim. He knows what I want to say. Nevertheless, I still want to say something. Well, Kavi, I would want to comment on these challenges and risk in two aspects. One is the bigger macro, jurisdictional, and the other one is more on the emotional aspect. The largest and the most populous Islamic country in the world is actually Indonesia, not Malaysia. And the second largest, most populous Muslim country in the world is Pakistan, not Malaysia, not London, not Dubai, not Abu Dhabi. However, where are these people? In Islamic finance, regulatory, legal framework. Where are they when you talk about leadership? So actually, that is the biggest challenge, to convert the most populous country in the world, the most Muslim populous country in the world, to embrace a comprehensive legal and regulatory framework in Islamic finance. You start wondering why it's happening that way. You see, Jim mentioned Malaysia comprised of multi-ethnic, multiracial. And that is where the beauty is. There is 150 Malaysians here, and they all are either Malay, Indian, or Chinese. Malay, hands up. Chinese, hands up. Yep. And Indian, hands up. Yep. And because of the diversity, we go through a lot of understanding and tolerance in coming up with the most liberal model in Islamic finance or in understanding Islam. However, if the country is like Saudi or the country is like Indonesia or Pakistan, where it's Islamic based, they are all Islamic citizens, there is not much of diversity. They are actually in a world of Islam which they thought is their Islam. So they don't actually review, they don't actually refine, they're just not aware that what's happening outside is actually a lot more what is demanded by the world. And as such, like Jim said, Malaysia is Islamic modernity. I think you Drake students are very lucky to be in Malaysia, specifically in Southeast Asia, because Islamic modernity is what the world wants. And Malaysia actually started it. When you talk about Islamic modernity, we go back to the book written by Dr. Reza. He talks about there's no God but God in that book. And he mentioned that there's only 1% of Muslim in United States and 4% of Muslims in the whole Eurozone. But these Muslims are a lot more advanced than the Muslims in Indonesia or Pakistan or anywhere in the Gulf. Why? Because, do you want to answer for me or I answer it for you? Well, because they are so developed, they get interviewed on CNN, they have social media, they articulate and they actually exchange ideas to the extent that they're able to come up with the modernity in the interpretation of Islam and also Islamic finance. Having said that, I also want to touch on another risk. It's actually image risk. When I actually was on a speaking slot in Luxembourg, there was about 200 participants like this, and I asked, who associates Islam with terrorism? And I had 2 hands up. And that was not the end of me interfacing with the people who are not familiar with Islam in relating terrorism. If you actually read the book, The World Without Islam, by, I have it here, by Graham Fuller, correct? Yeah, by Graham Fuller, The World Without Islam, he actually challenged that simplistic view. If the world doesn't have any Islam in it, will there be terrorism? Will there be radicalism? And he said, yes, there will still be. And who will be leading that? And he said the Tamil Tigers would probably still remain doing terrorism. And the Crusades would still happen. And Eastern Orthodox Christianity would have risen to prominence to still fight the West. So who said terrorism is related to Islam? Please have a deep thought of that. There's only one American, real, genuine American, in this whole panel, and that is Mr. Larry Zimpleman.
Thank you all. Unfortunately, we are out of time, so if you'd please join me in thanking the panelists. And if you'd like to continue your education in Islamic finance, Datuk Noripah just published a new book in June entitled Investing in Islamic Funds, A Practitioner's Perspective, that Larry has right there. And tomorrow morning, Drake Finance is going to be having a conference on Islamic finance, I believe here in Olmsted as well. So thank you all very much. And again, please thank our wonderful